What is goody, my people? We are back again with another gem. You know what I'm saying? Have you ever seen those websites where it's like the ad is on the end of it and it's like, doctors don't want you to know this health tip? You feel me? If this was one of them times, this video would be titled, Day traders or forex traders, they don't want y'all to know this. I'm about to put y'all on game to the best forex strategy in the entire freaking game. You know what I'm saying? I made a video about my forex strategy a couple weeks ago. If you did not watch that, go watch that now. It's like the beginning version of this one. I have since then updated this. I have made it more advanced. I have made it a lot more profitable. And I'm going to be sharing it with you guys. So light around now for more forex trading strategies or scalping strategies, whatever it is. This strategy works on the 15-minute time frame, the hourly time frame, and the 4-hour time frame. I mostly use it on a 15-minute time frame, so that's what we're going to be going into right now. You feel me? But I just want to say this. I kind of gotta just begin this video. I'll say begin. I just gotta begin this video by saying this. First of all, this is not financial advice. We're just friends. You know what I'm saying? I'm just trying to put y'all on so y'all can make some big body money. You feel me? I'm trying to make everybody eat because everybody deserves to eat. You feel me? But every strategy works. Every single, well, I won't say every single strategy. Most strategies, whether you find it on YouTube, your friend tells you a strategy, most of them work for somebody. Just because this strategy works for me and a couple people I've told doesn't mean it's going to work for you. It could work for 1 billion people and you could be the only person that does not work for. I'm just letting you guys know there are strategies, there are tons of strategies out on the internet right now, and all of them work. They're not scams. They're not these people telling you to do these random strategies just for fun. They all work for some people. It really depends on your personality. That's why you have to learn your personality when it comes to forex trading. Day trading as a whole, whether you're trading crypto, binary options, stocks, whatever it is, you have to learn your personality and build a strategy based off of your own personality. You feel me? So I just wanted to say that out there just in case I get somebody in the comments like, this didn't work, I lost $1 million. First of all, don't trade with money that you can't afford to lose. If you a billionaire and you want to lose $1 million, that's you. You feel me? But if you don't got $1,000 to pay your rent, don't put $500 into the market, man. Don't put your mama funeral, well, not your mama funeral. Don't put your great grandma funeral money into the market. Put like the McDonald's money into the market. Flip that 20 bucks to $1 million. You know what I'm saying? But without further ado, we about to hop right into this. I'm going to show you guys some trades that I have actually done myself using this strategy. Of course, I'm going to show you guys what the strategy is and how to do it, first of all. And then I'm going to show you guys like some trades I actually took this past week. I'm actually in a trade right now. Not going to lie to y'all, it's not looking very well. And I'm not saying this strategy you're going to win every single time. But the risk to reward ratio on this strategy, even with a win percentage of like 30%, you're still gonna be profitable. If you win 3 out of 10 trades and lose the other 7, you're still gonna be profitable with this trading strategy. You feel me? I'm not saying you're only gonna win 3 out of 10. You could win 8 out of 10. You could win 6 out of 10, 5 out of 10, but you're gonna be profitable. I promise you guys, if you follow the trading plan, make your own trading plan and follow the strategy, even improve the strategy for yourself. And you will be sending me a Lamborghini with how much money you need. So without further ado, let's just hop right into this. Alright, so boom, here we are. This is my literal chart right now. This is the real time. This is the trade I'm in right now. Honestly, I said it was looking bad because when I recorded it, the price was all the way down here. This is my stop loss down here. I got in literally right at this line right here. And then it went down a little bit, and now it's kind of right there in my kind of at the break-even zone. So I'm not really stressed about it. If I lose, I lose. If I win, I win. You feel me? But this might all look so confusing to you. All these different boxes. I have black candlesticks, all that type of stuff. So let me just go to a blank chart real quick. So I'll show you guys exactly what the strategy is in case you did not watch the video from before. Right? So my strategy is all based off of riding the trends. I call my strategy, right? I got a good name for it. You ready? Helping hand. You feel me? Don't ask why I call it helping hand, because I'm going to tell you why I call it helping hand. It's literally very simple. So let's say we have a, let me find a good example here. I should have found a good example before I even started this video. All right, so here we are, right? This is exactly how I do the strategy. I'm not going to make this video into multiple different parts, even though I could make this video into mad different parts, but instead I'll put it all into one video. So if this video is long, just know why. Feel me? It has all the information in there, so you guys just have one video that you guys can watch through multiple times, and until it gets embedded in your brain, so you can start making this big body money. You feel me? So like I said, it's all based off trends. It's all based off higher highs, higher lows, lower highs, and lower lows, all of them type of stuff. So this tool right here is very useful to me. You can find it over here on the by the brushes aisle on TradingView. I just have it over here on my favorites, and basically what it does, you come here, do like it's just lines that you can draw, so it makes it easy for you to see the high points and the low points. Now, as you can see, my chart is all black. I have all of the black candlesticks. I could have it in the green and the red, like some people have, like green candlestick is up, red candlestick is down. But for me, it kind of can psych me out sometimes, because I could think a green candle means it's going up, or I could think a small little red candle means it's going down. Like this candlestick right here, for instance. Let me put a box around this real quick. So if I put it on, okay, this is the green one, a colorful one. This right here, I would be like, okay, I see a red, then a green. I think it's going up, but then I see the red candlestick, that means it's going down. And I see this green candlestick, I might get psyched out and think, oh, maybe it's going up right now and going for a buy. But then, of course, you see it's another red candlestick. This was not a very strong green candlestick, so that's why I like to keep my charts black. I would suggest you guys keep it black too, because I'll show you guys exactly why you should keep it black, because you really you're basing your all of your structures, all of your lines and stuff off of just higher highs and higher lows. You're not really looking for green candles, red candles. So I keep all my candlesticks black, and basically what I'll do, I'll take this tool right here and just identify lower highs, lower lows, higher lows, and all that type of stuff. So for example, I'll take this line. This is the high point right here that it was at, and then before coming back up, it hit all the way back here. Then we see it had a high point up here again. Technically the high point is up here. I go based off the wicks, but we'll just say this is the high point right here. Then it had a low point and went all the way down here, then a high point over here, and then we had a low point down here. This is the green candlestick right here that we were looking at before, but we're just gonna go all the way to the lowest point that it was at, which is this low right here. So my strategy would basically wait for it to break these higher highs or higher lows. You first have to identify the trend, whether it's an uptrend or downtrend. How you do that is obviously just looking at the higher highs and higher lows. So like this right here is a downtrend, because we have a high right here, then we have a low, then we have a lower high right here, then we have a lower low. So we're in a downtrend right here. So I'd only be looking for trades, I'll only be looking for sells in this type of trend right here. But this right here, as we see, it is on a downtrend. Let me go back so we can just look at it as it goes. So see, this is on a downtrend. I would either wait for it to break this low right here, or I'd wait for it to break this high right here. And basically what I would do once it does said thing, okay, so we see it going up, we see it going up. This still isn't a break for me. It has to, I just like for it to close above it. Like this candlestick did close above it, so we'll start from right now. I can take these lines off now because I already established this is the one that I'm going to be working with. This is the one, our opportunity. I call it an opportunity box. So then I'll take a box and put it around the highest point that we had. So if you guys remember, this is the highest point. So we'll put a box around the highest point we have. If we're looking for buys, we put a box around the highest point we have. If we're looking for sells, we're going to put a box on the lowest point we had. So let's say this price ended up coming all the way down. It came up here, then it crashed all the way down here. And I would be waiting for it to come all the way back up to this one, this box right here, this box opportunity. This is the lowest candlestick that we had, because this is our lower low, you see right here. So let's say that I would be waiting for it to come back up here to retest this area, then I would go in for my sell right there. But since we see it is not doing that, we would use our highest candlestick with the lines. It's very easy to see these trends if you use the lines. You can try and eyeball it, but using the lines just makes it so much simpler, so much easier to see. Makes you much more confident in the trade. So put a box, I call it the opportunity box. So put your opportunity box around whatever candlestick you're going for. In this example, we're looking for a higher candlestick than this candlestick, and we got one right here closed outside of our opportunity box. So then once it's going to keep going up, most of the time it will keep going up, boom. So then I would end up putting a buy order in or a buy stop in. Basically, I don't want to have to sit at the charts 24/7 waiting for it to come back down or retest this box, because my trading strategy is basically based off of the fact that it's going to pass this lower high. We was in a downtrend, we had a lower low, then a lower high. and then we end up making a higher high right here. Well, I don't know where the candlestick's gonna stop, but let's just say the candlestick stopped right here and made a higher high. I'd wait for this higher high to come back down and retest our previous high on the downtrend, but now we're in an uptrend, so I'd wait for it to come back down and retest this candlestick right here, because most of the time, I want to say 80 to 90% of the time, once it breaks a pattern, once it breaks a trend, it's gonna come back down and retest that area, and that's why I draw opportunity box around it. If it does not come back down and retest this area, we do not trade it. If it does not touch our opportunity box, we do not have an opportunity. Understand that you're not going to get every single trade. Understand that some trades are not worth getting into. Understand that a missed trade is better than a lost trade. It's better to miss out on a trade because you were not certain on it, or you were not so sure on it, or it didn't follow your trading plan how you wanted it to do. It's better to miss out on that trade rather than to get into that trade just because you're bored or just because you think it might work, and then you end up losing money. So like I was saying, we wait for it to come back down and retest our opportunity box. But what I would do, as soon as I see it come out of this box, I will put a buy order in. I put it a little bit into the box, but sometimes I'll put it right on the box. Sometimes I'll put it like right here, but for right now, we'll just put it at the box itself. Then we'd have the stop loss right under the box a little bit. Give it a little bit of breathing room. You don't got to put it all the way down here. It's really up to you. I put it a little bit outside the box, kind of like this. You bring down a little bit more, and then my take profit would be based off of whenever we get a high point and it starts reversing to come back down on here. So we're gonna wait. We're gonna see what the price does. See, this would get me in right here. This would have got me right into the trade. This candlestick right here, it hit my buy order. I would put this in and waited for it to go in. I would usually set an alarm or add an alert so I know, like, okay, I got into the trade. You feel me? It would send an alert to my phone and be like, you got into the trade. Just because I had set this buy order before the price was even over here. I just want to be alerted when I'm actually in the trade itself. So now I'm actually in the trade. We see it came up here. Let me delete this line so I can make a new line. We have the low right here. We have a high, then we have the low. And then we see we have a high up here before it reversed. This candlestick right here is a red candlestick. If you have green and red candlesticks, this is a red candlestick. We see it came back down and retouched this box. So then to get my take profit, I'm waiting for basically a reversal of it. Most of the time it will go up a little higher. Then I'll start to see it coming back down, and then I'll put my buy order in, or my I'd be able to pinpoint my take profit and everything like that based off of that. But for this one, it kind of broke out of the box like a little bit and then dropped back down, but that still should be fine. So I actually took this trade myself, so I know how this is gonna play out exactly. It's like I'm telling the future. But how it set my take profit levels is I'll take this Fibonacci right here. I'll go from the lowest point, then I'll put it up to the point that it reversed at, then I'll put the box right at this line over here. There's two different lines. You can have the 27% and the 61.8%. Most of the time I have three different take profits. So the first take profit would be right here at the last high. So we see it came up here, then we see it dropped down to get us into the trade and retest our opportunity box. I'll put one take profit right here where I'll take some of the profit out just in case it ends up going all the way back down and hitting our stop loss. Then this second take profit that I have would be at this 27% line. So I'll put another take profit here, and once it hits this line, I would then move my stop loss into profit, or stop loss into break even, so there's nowhere I lose money on this trade. And then I'll also take a little profit off here and let the rest run up until it hits the 61.8% mark. So we're gonna see how this plays out. It's going up, struggling. It hit our first take profit, hit our second take profit. I think it retraces. Oh, I could have sworn to retrace down over here and then hit our third take profit. But this is basically exactly how it plays out. So to run it back really quickly in case you did not understand it, we have to determine our trend. If we're looking for a buy or sell, we have to determine our opportunity box. We have to determine our highs and our lows. And how we do that, we're gonna use this tool right here from the bottom to the top. Wait for it to either retest this area, like drop all the way down here, then retest this area, this box right here, or retest this area, which is what it did before. So we'll have the high up here, then a low. We see it broke this. I'm over here pointing at the screen. We see it broke this high right here. So then we put a that's now our dang, why am I drawing this? But that's now our opportunity box right here. We put a box around it, wait for it to break outside of this box, put our buy order in at this box right at the top of it, put our stop loss right under our opportunity box. We would use our Fibonacci from the lowest point to the highest point it went before retracing back down to get us into the trade by hitting our opportunity box again, retracing down and retesting our opportunity box. Then we would put our take profits on the last high that it had before retracing down to our opportunity box, which is this high right here. Is this better? Yeah, this would be our first take profit. Our second take profit would be on a 27% line. So once it hits this point, that's our second take profit, and then I'll put my my order, well, my stop loss into profit. And then our third and final take profit would be at this 61.8% line. So yeah. So that's basically exactly how it works. It's pretty simple. I just wanted to explain it. I said it multiple times just to try and make it as clear as possible for you guys, just to make sure you guys understood it. If you guys obviously have any questions, you can always just comment it down below or hit me up on Instagram at Juber_. But I'm gonna go through some of the trades I actually took. Oh, this is the trade I'm in right now. See, I'm actually in profit. How many pips am I in profit? 23 pips in profit, which is cool. I actually thought this was going to be a loss because it did go all the way down here and almost hit my stop loss. If we look closely, it was what, 1 pip off my stop loss. But right now we're in profit. So basically why I took this trade, it's the same exact thing. This is my opportunity box right here. I made the opportunity box based off of this high. So if we use the same tool, we have the bottom right here, the top right here, then we have a bottom right here, then we see it broke all the way up here and crashed all the way back down to our opportunity box when I made the opportunity box based off of this candlestick right here. Let me draw the box again for you guys just so you see it. This candlestick right here. I put my stop loss right below our opportunity box, and then I grabbed out my Fibonacci right here from the bottom to the top. I put my take profit, my first take profit will be right here. That's why you see this yellow line, that's an alarm. So once that alarm hits, it'll send a message to my phone. That way I'll know I'll go look on my phone and take a small profit off. And then I'll wait for it to hit this line right here. And my last and final take profit will be all the way up here. And the risk to reward ratio, if you look up here, is, it's down here, is a 4-to-1 risk to reward ratio. So I'm risking 15 pips to make 74 pips, which is absolutely amazing. That's what we like to see. So let me go back on a couple other trades that I've done as well. This one right here is the same exact thing. It's literally clockwork. It came up here. It was on a nice little uptrend. It came up, then down right here, up, then down right here. We waited for it to come all the way back up and retest our opportunity box based off of this candlestick right here, because it broke through our previous high, or our previous low I should say, and I made the box based off of this candlestick right here, this candlestick that's in my green box right now. I keep trying to point to the screen so you guys can see it, but it's not really working. But as you see, I put my stop loss right above the box, waited for it to come back up and retest the area. It came all the way down here, retested the area, then dropped back down, all the way down there, and ended up hitting all of my take profits. This right here was almost a 3-to-1 risk to reward ratio, and I got that. This trade right here was 2 different trades that I had taken. One of them actually lost and one of them won. So if you look right here, this is literally, I waited for it to come up here and retest these boxes, or these candlestick right here. So once it did, it came down here, came back up here, retested it, got me in the trade literally right here, dropped all the way down. Then I saw another opportunity right here to get into it. If I remove this one, I saw another opportunity right here to get into it. I saw this box right here. Well, I saw this low right here. Then it broke our previous low, which was over here, and I was waiting for it to come back up and retest this candlestick again, because we had these candlesticks that broke out and closed outside of our opportunity box. So I put my buy order in right here, but it ended up taking me out the trade right here before going all the way down to our take profit in the first trade we were in. So I lost this trade, but I won the other trade. What other trade did I take? I took this trade right here. Did I take this trade right here? I don't even remember if I did. I don't think I took this trade right here. This trade right here I did take, but I cut it short. I took a take profit at this line right here because I was going on a flight and I didn't want the trade to go like when I wasn't able to like keep track of it in case I hit any of my take profits and I couldn't do anything. So I ended up closing it out literally at this green line instead of going for the whole 91 pip gain I was supposed to have. This is literally based off the same exact whoa, I don't know why my screen just did that, but it's based off the same exact strategy. And most of the other ones I deleted. I was trading this one right here. It came down, came back up. I traded this right here. I caught a sell right here. But I deleted all the other ones. I only kept these because I knew I was going to make this video and I wanted to show you guys like the trades that I had taken in the video. So our trade right now is doing pretty good. It's probably going to hit our second take profit pretty soon. So that should be late. But hope you guys were able to understand this video. Hope the video was not too long. Hope you guys can use this strategy and make money. If you do, you know my cash app, man. If you make money, you know my cash app. If you have any questions about the strategy, feel free to hit me up on Instagram. I didn't tell you guys why I call it helping hand. Okay, this is why I call it the helping hand strategy, right? So this is how I think about it. So this is our opportunity box right here. We're waiting for the hand to come reach back up. This is let's say this is our friend right here. This candlestick right here is our friend. We're waiting for another candlestick to come up here. This one is reaching down. It's kind of corny, but this one is reaching down to come help the other one up, right? And then we have another candlestick coming up to reach to come get this one's hand, the helping hand, but this helping hand was weak, so it dropped it all the way down there and it died. But because the candlestick died, I won. Does that make sense? It really don't make sense, but that's why I call it helping hand. It's just, I don't know. But anyways, if y'all enjoyed the video, like the video now. If you guys want more Forex strategies, I could do an institutional strategy for you guys as well if you guys want me to do that. I could also do a supply demand zone if you guys want me to do that strategy as well. I like that strategy. Also, but really just honestly let me know what the heck y'all want in the comments down below and I'll give it to y'all. But this strategy right here is straight fire. Don't share this with your friends unless you want your friends to make billions of dollars. That's all I'm saying. But that's really the end of the video. Good luck with all your trades. Good luck with all your crypto, your stocks, whatever the heck you got. Good luck with it. You know what I'm saying? I'm gonna see you on the next video.